I've been trading for over 10 years and I see 99% of traders typically lose money and fail to be consistently profitable because they lack a real trading system and edge. That is why in this video, I'm going to show you a proven trading system with a defined edge that our trading community uses every single day to generate profits like these. Watch this video to the end because it's the most valuable video I've made so far. Anyways, let's dive into it. So this would be the ultimate top-down analysis to becoming profitable. And the three different steps that I want to take toward becoming or doing this top-down analysis is analyzing the big picture, breaking down the pre-market structure, and taking the trade. So starting with our most profitable trades, which come with trading stocks that have catalysts. There's multiple different things that go into this. And the first is understanding a couple of things like the gap percentage, the news headline, and the higher time frame technical setup. This is a process that we do every single day. We start when a stock receives news or a catalyst. We then place that stock on a watch list, and then we begin to analyze it. The first thing that we're going to do is analyze what is important about this stock. All right, so the first thing that we do before we get into the charts is we see stocks that are having news or catalysts that are moving in the morning, so we know what to trade. This is the first step in analyzing what's going on. So in this example, we're going to talk about a setup called Capri, which is a trade that we took and was a very big trade. This trade was so good that it had potential to make your entire month, possibly quarter, if you executed it well. And this is something that we preach every single day in the Discord community on understanding true edge and operating in market inefficiencies. Without going too far into that, let's continue. So this news came with a stock getting news, a word that a judge was going to block a merger that involved Capri and Tapestry. This is a very big deal, and it caused the stock to gap down almost 50%. So 50% gap down in a stock is a very big deal. If we come over to the stock itself, you can see how big of a move this made. So first step in the morning, we see, okay, what's gapping up, what's gapping down, and then we want to start to filter and focus in on what's the biggest opportunity. In this case, on this day, Capri was gapping down 50%. So that immediately tells us this is very important. We looked at the news headline. We read that there's a merger. So this is very unusual. This is a significant opportunity. Day in and day out, there's stocks that'll gap up 2 or 3%, sometimes 5% or more. And we'll focus on what's available. But anytime there is something this big, it is going to take all of our focus and attention. So with that said, after we understand the gap percentage, the importance of what's going on and the news headline, we want to then go into the technical setup. So the first thing with the technical setup, which is a big part of what we do in understanding where to begin our trades, is we want to start zoomed out as much as possible. So starting with the weekly chart, we zoom out as far as we can to get a really good idea of where the stock is. So we can clearly see that the stock opened in 2011 near this 23 level, and throughout time has seen some points of resistance and support at this level on the weekly chart. And then the stock price was gapping down right into this spot. This chart is showing the week already being done. So the stock went a bit lower from the 23 level, but into the initial day, if we go into the daily chart, you can see the stock price was gapping down right into this spot, which will go a little bit further down into the different time frames here in a second. But before we do, so with any stock, and this applies to really any charting that you're going to do from a technical basis, there's a few things that we want to look at. And I do go into more depth into charting and finding support and resistance levels in my full guide to becoming consistently profitable. But quickly, there's three main characteristics of finding key levels that are very important. Number one is number of tests at a key level. So the more tests, the more important the level is. And also ideally, the time frame is important here as well. The bigger the time frame, the more important it is. And then looking at the level through multiple time frames. So if we look at the weekly chart, we can clearly see these levels. Then we want to go down into the daily chart and see how has price respected these levels on multiple time frames. So in this case, on the daily, you can see there are multiple spots where the stock has tested and rejected this area of resistance. And then we want to begin to go into the smaller time frame, which on this day that the stock gapped down, we'll go into the execution of the trade, but you can clearly see that the stock, after breaking through this level on retest, respected it multiple times in the pre-market and then also into the trading open, which is what what led to the trade that we're going to go over that we took on this day. So going back, with stocks in terms of what is important from the higher time frame technical setup, we want to identify key support and key resistance levels. So these levels are levels that have a lot of number of tests. They test and have confluence on multiple time frames. And then also the measured move is significant. So you can see that each time that Capri had tested this big level, this is on a weekly chart, it made very big reactions off of this spot. So this 23 spot tested and the stock dropped 40%. The stock tested here and dropped 26%. And then once the stock finally reclaimed this level, the stock went on to run over the course of a year over 233%. And this is really something that applies to any stock in any chart. This one in particular is a pretty big range, but you'll see different levels stand out throughout your charting as you apply this to pretty much any name. So now that you've analyzed the big picture and what's going on, we've identified a key spot and key area on the stock. From the higher time frame, we understand the news, we understand the gap percentage is very significant. And then number two is we want to start to break down what the pre-market structure is. So for pre-market structure, there are a lot of different ways that a stock will set up, and we have an entire ebook on this in the Discord community that goes through the different ways that a stock will be setting up in the pre-market to give us an idea of what type of trade do we want to take right on the open, or even sometimes shortly after the open. We go through the different types of variables that we need to see. We want to see a gap percentage above 2 or 3%, a new fresh catalyst, and then relative volume increased, which is the R vol. There are a couple different ways that stocks will set up, but in this case, we're going to go through one example on Capri. So when analyzing the pre-market structure on Capri, there's a couple things that immediately we want to look at. There is the relative volume, the ATR, RSI reading, and the structure itself. So the structure itself is one that is reminiscent of a support and resistance pre-market structure. So we have the stock gapping down through a very big key level and then having confluence with the resistance level, which aligns with the higher time frame, as you can see with these multiple tests in the pre-market. So this resistance structure is something that we would then use the pre-market PDF ebook that we've created to know through several repetitions that a front side short is the type of trade that we want to do. One quick thing here, I think this should be first actually. So when we're breaking down the pre-market structure, beginning to look at what type of trade we might be interested in the stock, there's a couple of things that we want to look at. We want to look at the relative volume. We want to understand what the ATR is for the stock and also what the overall pre-market structure is. So starting with the R vol, this is just simply an indicator that tells you the relative volume that the stock is currently trading based on the last 21 days. So a stock is going to trade a certain amount of volume during the month, which is 21 trading days in a month. And this indicator is simply going to show you what the average is. You can find this indicator by going on TradingView and searching for relative volume at time, and you'll see it come up pretty quickly here. And then you'll want to go to the settings and change the length to 21 days. So very simple. The point of this is just really to verify that the stock is trading more than normal volume and is good for picking the right stocks. It's good for overall stock selection to make sure you are trading something that is moving and not stagnant. Then the second step, we want to check the ATR. So the ATR is very simple. It's just the average true range of the stock. So the average true range of a stock can be found by going to TradingView and searching ATR. You'll see Sati's ATR levels here. You can add this to your chart, turn it on, and up in the top right, you can see that the stock's ATR is about $1.94. And this is basically how much does the stock trade in the last 14 days? How many points does it trade per day? So you have an idea of how the stock moves. This is just an important piece of information when we get into actually taking the trade and when to exit for profit. Another variable that we want to look at is the RSI reading. So the RSI reading is a very effective way to understanding what type of setups or trades that we want to take right into the open. With the RSI reading, it can really help with your entry timings, and this is a variable that we want to check in the pre-market before we get to the trade. So very simply, we want to look for divergences or good RSI health. In the case of this Capri trade, we clearly can see that there is a bearish divergence in the stock price relative to the RSI. What this means is very simply that the price of the stock on the 10-minute time frame, you can see it's a little easier to get a reading of the RSI on a 10-minute 5-minute time frame versus smaller than that for the purposes of identifying the pre-market structure or analyzing it. So with Capri, we can see that the price of the stock in the pre-market is respecting that level, but also it's making lower highs while the RSI is making higher highs. This is a divergence. So you see the price here. So you see the price here is respecting, going from a very oversold point after the initial headline, and we put in a peak of RSI here when the stock price is here right near 23, and then later in the session we see the price bounce a little bit, which is lower, and the RSI is higher than the prior peak. Going into the open, you can see that the RSI makes a higher high from the entire pre-market session while the price isn't higher than the prior peak. So this peak was never really cleared. Price actually closed lower than this prior peak, while the RSI is much higher than it previously was in both instances. We have a pretty cool graphic on this. So you can see these are the different divergences that we'd look for RSI, which we go into a little bit more depth in another video. But if you want to save it, this is a very good, quick way to remember what's what. Okay, so we have the breakdown of the pre-market structure. We understand the big picture with the gap, the news, and the technical setup on the higher time frame, working in from the weekly, the daily, down to the pre-market, to the 5-minute, to the 10-minute. And then we look at the pre-market structure and we get to know, is there elevated volume? What's the stock's average true range? How does the RSI look? Is there any divergences? And then we want to know what the structure is, which again, we do go into more depth in the varying different types of structures that pre-markets can set up in our PDF ebook. And then in this case with Capri, this structure was a support and resistance structure. So very simply put, the stock had clearly carved out a resistance level in the pre-market, which is what sets up the next step. So the third step in this process from the top down of analyzing the big picture, from breaking down the pre-market structure and the variables for the trade, the third step is taking the trade. What are we wanting to do once we have all that information? So with this, we have a resistance structure. This has confluence with the higher time frame, which is important. So you can see the stock is tested as resistance 3 times. And then this sets up the trade, which for us is called a front side short, which simply means, very simple concept. You have the price on the open, makes a first move into this resistance level, and then turns down off of the level, creating an entry. Typically, we want to look for a signal, which can be under prior bars lows, or you can even start a position once you see the rejection of that level, validate, and then your stop is simply just above that, and you're looking to target the lows. All right, so once you've taken this trade, we have to remember what the ATR was. In terms of taking profits on the trade, it's very helpful to understand what the ATR is, which is something that we'd already have done. So the stock typically moves about $2 total in the day, and I do believe that that is after the last few sessions. So I'm recording this, after the Capri has already moved and the range has expanded a bit. I do believe it was about $1.50 or so before, or even less before this news. Again, it's taking the average 14 days into account. But nonetheless, the stock made over $1, about $1.50 move into this spot, which is where we would begin to look to take profit. You can also just look at the overall candles. One thing that we like to do is just trade the prior bars. So as long as once we enter the stock, whether it's starting a position on the rejection and then adding to it here, once the prior bars fail, now you have your trade live. You're just following the trend. So as long as this candle stays below the prior, we continue to hold. So if we enter on the break of the prior candle, so it's just a simple change in character, then we just continue to trail. As long as this candle doesn't close above this one, we still hold. As long as this candle here doesn't close above the prior, we still hold. And then they continue to repeat this cycle until you get to about here where the candle closes above the prior candle, and you can take off the trade for profit. At least most of the trade. And this is where we get into understanding how to not only take profits based off the ATR, which this aligned well with about an ATR move into the lows before it started to see a little bit of a bounce. But typically what we'll like to do is sell around half of our position for the trade once it makes a decent move like this into profits, and then we see some kind of notable change in character on a lower time frame. This is currently the 5-minute time frame. But then for the rest of the position, what we want to consider is the overall trend. So this is a method that we use to stay in trades longer, particularly stocks that have catalysts that are likely to trend on the day for the most of the day. Using something like an EMA can be a very powerful way to stay in a trade, a winning trade, much longer. Once we get into the trade on Capri, for example, with the front side short, there's a couple different entries that set up. You can look for initial rejection of the key level, which starts the entry. So you can begin to start a position as the price begins to turn lower. I like to define this as the prior bar starting to break. So in this case, you can see price was trying to respect this initial candle higher, and then we saw a change in character once it closed below here on this candle, and then even on the next candle on the 5-minute chart, this be respected briefly and then turned lower. So this is, to me, the most defined entry, whereas an initial rejection offers more expected value in the trade but is a little bit riskier. Either way, depending on if you're taking a full entry on the break here or starting a position here, your risk is just above. So you're risking on this trade about 40-50 cents total max, while looking to target at least an ATR move, which again, average true range. You're wanting to target something that is relative to what the stock typically does. Now, one thing just to note that's very important to consider is a stock that is trading with relative volume infinitely higher than it normally does. In this case, I think the RVOL was like 300 or something, which makes sense. The stock gap down 50%, very unusual. It's likely to try and trend more, or it's likely going to try and move more than it normally would, right? So that just makes sense. But knowing the ATR can help give you an idea of what to expect when the stock does start to move. And in this case, from the move on the rejection all the way to the lows here, this was about an ATR move. Now, when in this trade, we typically like to split the position either in half or in quarters. In this case, to simplify, what I like to do is look for a reason to sell. So initially taking profits into about an ATR move, we start getting into this here, but you can say, okay, well, as long as this candle doesn't close above the prior, then I just want to keep holding, which is the case. And this continues to follow the same pattern over and over until you get to this candle here, which ironically, or not so ironically, aligns with about one ATR move. Then for the rest of the position, something that we use that's very powerful in the holding trades longer and maximizing profits is EMAs. There are plenty of other ways and methods that people like to use to trail their positions and stay in winners longer. For me, after several back testing strategies and testing this in real life and in real trades, this has been one of the most powerful things that I have found. And really all that an EMA is just a visual representation of what the stock's trend is. So it makes a lot of sense. It's very simple. The first outer part of this purple band is the 9 EMA. The top of it is the 21 EMA. And then this orange cloud is the 34 here and the 50 here. So how you can get these, you can go on to TradingView, go to indicators and search Ripster's EMA clouds. And then you would want to just change the settings to the 9, 21, 34, and 50 EMAs. Now these can work on any time frame. I particularly like to use them in two ways. One, just a quick way to see what the trend is on a daily chart, but mostly, and about 95% of the time, I'm only going to be using them on my day trades when I'm looking to trail part of my position and really hold out for a bigger gain. So in this case on Capri, you can see that the stock really represented or respected the 9 EMA very, very well. It got close to the 21 EMA one time and then didn't break the 21 EMA or any averages on a closing basis or any important spots as far as this cloud is concerned until the very end of the day. So as you can see with this, the price respected the 9 EMA almost the entire session. It got close to the 21 EMA for the first time near the end of the day and then didn't break any of the clouds. In particular, it broke this 9 EMA briefly and actually downticked into the close back below it. But this is a really powerful example on how you can hold winners much longer. It gives you a visual representation of what the trend is for the stock and you're not guessing where to take profit. For me, I like to take some profit as you hit into around an ATR move or you see a candle or a significant change in candle structure like this where the prior bars trail sell out. But for part of the position or the majority of the position with a trade that you expect to move well, this is going to help hold you in the trade almost the entire day in the best of cases. So now you understand from the top down how to analyze the big picture of a stock setup. You get to understand how to break down the pre-market structure with an example, and you get an example, and you also understand the different variables that go into taking the trade. This is all just one example. All of this information is one quick way to show one example of what we do every single day in our community. There's a lot more to this and a lot of ways to become consistently profitable. And I put a link in the description for you to join. So be sure to check it out. When you do, please send me a message. I'd love to hear from you in the chat.